The odds of a rate cut now was put more strongly than 50-50. But right now you can see that that has really gone out the window and there's almost no chance of an interest rate cut today. The chance just given at 7%, with the odds being that 93% chance, according to the money markets, it will be on hold. In fact, some economists now are even suggesting that the next move in interest rates in Australia will be up and not down. But that depends very much on where inflation goes to from there. Let's have a quick look and we'll see very, very shortly that this decision has dropped, and as expected, interest rates are on hold at 3.6%. So there is no surprise in this whatsoever. The big question is what has happened with the Reserve Bank. We'll find out what their statement says very, very shortly as we get to that. But the question about this is really where it goes to in terms of this decision. So just looking at the statement that they have just put out in the last little while, it effectively says, as I get to the very bottom of that, recent data on inflation suggests that some inflationary pressure may remain in our economy, with private demand recovering and labour market conditions still appearing a little tight. The board decided it was appropriate to maintain the cash rate at its current level at this meeting. Of course, it was well known that the inflation rate that came in was much, much higher than what the Reserve Bank's own forecast. So for the quarter, the Reserve Bank was forecasting 0.6% inflation. It came in at 1%. The board will pay attentive to the data and the evolving assessment of the outlook and risks to guide its decisions. In doing so, we'll pay close attention to what's happening in the global markets and financial markets, trends in domestic demand and the outlook for inflation and the labour market. So this is the big issue right now. The suggestion is now that interest rates are on hold in Australia for a prolonged period of time. If there is to be an interest rate cut, the money markets right now say that will not happen until probably the middle of next year. Now, on top of this also, the Reserve Bank today puts out something else, and that is its statement of monetary policy. Now, inside that statement of monetary policy, effectively it gives new forecasts and upgrades where it believes the economy is right now. So if we go there and have a quick look at what this particular statement says, we can start to see that the Reserve Bank itself is changing its forecasts on where it believes the economy is going to. And so from that point of view, that inflation number has changed them out. Here we go. So you can see unemployment, it's now got a higher unemployment rate forecast for Australia. The inflation rate is much, much higher than what it had previously been forecasting at the end of December this year. Even the underlying rate, it says at 3.2%. Now, the importance of that trim mean, the underlying rate is it means it believes now inflation will go outside of its target band of 2 to 3%, which again would suggest that the trend is more for either interest rates to be on hold or to be higher. And indeed, it now says that the economy could pick up, but the cash rate based on markets, this is not the Reserve Bank's own forecast, but based on market forecasts, it expects even the cash rate to be a tick higher than what it is right now. So they're key forecasts and important forecasts that suggest that there's a bit of a turning point inside Australia's economy, Ash.
Okay, so this result was expected today, Ross. Have we seen much market reaction yet to the decision?
Well, let's have a little look at that, because it'll be reacting not so much to the decision, but to those forecasts we just showed you. So let's go through and just have a look at some of the markets and see. This is bond yields straight off the back of it. Bond yields bouncing around the place, a little lower maybe than what they were before. So in other words, maybe just pretty much line ball here, I would suggest. Market's pretty much taking this. Let's go further forward. Look at the stock market a little higher. Now, that would suggest that maybe markets are getting a better feeling about future rates, and the worry about higher interest rates might not be as great. It's not a big pickup, but it's a little bit of a pickup, about 0.25%. Currency, you can see here the currency went down, now bouncing back up. And again, the currency going down would normally suggest lower interest rates, or at least the pressure off higher interest rates. But you can see now that's bouncing around the place as well. The odds of rate cuts in December. Now, this is also changing. And so as a result now, the markets are saying there is a 20% chance of an interest rate cut in December, but still an 80% chance of rates being on hold. The interesting part about this is where money markets sit right now do still suggest that most likely, if there is going to be an interest rate cut, that interest rate cut is likely to come at the very earliest in May next year. But of course, there's a lot of economic data that will come out between now and then. But for the time being, of course, the Reserve Bank keeping interest rates on hold at 3.6% today, and you suspect for the foreseeable future.
Ross, thank you for that. Appreciate your analysis.